Yes, Stephen, as I was saying, the payrolls data came out worse than expected, and the data really indicates that U.S. labor markets are really still very weak, and that poses a downside risk towards the economic recovery in the U.S. And we did see the dollar really coming under pressure on Friday, and that was mainly because investors increased their expectations of a Fed also expanding their asset purchase program in their next Fed meeting. As you can remember, this data is the last data before their Fed meeting early in November.
Of course, we also had the IMF meeting at the weekend and the G7 meeting of ministers as well. And nothing concrete really seeming to come out of that is going to give some direction to currencies going forward, or to coordinate rather how currencies act going forward.
Indeed, there was nothing concrete in terms of what came out of the meeting. But then I think what we saw was that there was a lot of talks and calls for IMF to increase or to take their leading role in terms of stemming currency volatility, which has sort of increased global imbalances. And there were also a lot of calls to increase cooperation, especially in terms of implementing such policies as the quantitative easing. And we saw our own Finance Minister, Gunnion, also coming in favor of increased cooperation and really reiterating that the rand remains strong, and that will have an impact and a negative one indeed for South African economy.
As you mentioned, a lot of calls for action, but really no action. Do you think this might be taken forward to the upcoming G20 meeting of ministers?
No, definitely. I think at the G20 meeting, currency volatility will continue to be on the agenda, and it will continue to be discussed. But then whether anything will be done from it, that remains to be seen.
Of course, pretty quiet today. We have holidays in the US and in Japan. We are getting the minutes off from the previous FOMC meeting tomorrow. We also have some data coming out locally. We have manufacturing data tomorrow, retail sales on Wednesday, mining production on Thursday. What's your expectation on some of the data we're going to see this week and how it could influence currencies?
No, on the data releases locally, we're expecting, as you said, manufacturing coming out tomorrow, where we think manufacturing, although year-on-year growth will be higher, but then month-on-month growth will show manufacturing declining by around 1.3% month-on-month. And that is mainly because of strike activity that we saw on the motor industry in August, and also because the rand remains so strong. And with retail sales, we are expecting also a higher number, while with mining production, we're expecting mining production to continue with its downward trend. And then on Thursday, again, we have monetary policy review from the Reserve Bank. And with inflation not really on the radar screen at the moment, we're not expecting big surprises coming out of the monetary policy review. And with international data, I think I believe that the most important data will be the FOMC minutes, where we can see what the Fed really think about the economic recovery in the US.